You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back for usually the second dose of our bi-weekly options extravaganza known as the Option Block. This week, it is episode uno. Of course, no shows on Monday for the Martin Luther King holiday here in the U.S. So unfortunately, you got no taste of your 80s wrestlers on Monday. We'll do it again on Monday's show. Can't really do it today because our compatriot, the uncleist of Mike's, decided that it was a good time to go off hither and yon on vacation. Who told that guy he could? There's no vacations from the markets, no vacation from the Option Block. But c'est la vie, he's off having fun in the sun somewhere. Of course, before I even get to the uncleist of Mike's here, my name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are binging right now. Remember, if you want to engage live, want to ask questions, do all that fun stuff, also join us for the pro Q&A sessions on Tuesdays, the Options Oddities on Fridays, the giveaways, the other cool stuff we do. Check out the Secret Club, theoptionsinsider.com/secret club. And of course, listen after the fact. We know a lot of you do. Maybe you can't make the live. Maybe you have other stuff going on. We get it. So if you like what you hear, just keep rating and reviewing it. And wherever you get the show, could be Apple Podcasts, could be Google, Spotify, wherever you get it. We've all seen there are a legion of new people who are discovering options for the first time these days. And they're going to their favorite podcast provider and they're typing in options and they're finding all of our shows. So your reviews will help them say, hey, we like this one. It's been around for a while. Oh, I don't know, 15 years. At least the network has. And I might want to give it a listen. So we're seeing a lot of people doing that these days. So your reviews can help keep that process alive. And of course, however you listen live after the fact, we love you all. So keep hitting us up. Your questions, your comments, your insights, your pearls of wisdom. We do love to hear from all of you folks out there. And like I mentioned, we're not hearing from the uncleist of Mike's today, which is a shame because it's a very Uncle Mike type of day. So we'll have to make do with a twofer out here on the show. Of course, we are joined by the dynamic duo of the Rock Lobster, a.k.a. Mr. Andrew GIOVINAZZI from OptionPit.com, as well as his superhero alter ego, Volman. Welcome to both of you.
Wow, it's very exciting to be here, I have to say. I'm highly excited to be here. Ballman's excited too, but he's a stick man, so he really can't.
Yeah, yes, he has to save his comments for later. You know, I was all set. We were north of the 20 handle, Mr. Rock Lobster, earlier this week. I was all set. We still are technically, but we were north of 22, and so I had the logins all queued up. I don't know if we're still in logins territory. We're coming off a little bit today, but we'll get to that a little bit here as we kick off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading, what the heck is lighting it up out there. And today, mostly green on the screen today. Dow up 0.75%, S&P up about 0.9%, NASDAQ up over 1%, almost 1.25% out there. A little bit less for the Dow and the S&P than they were earlier in the session. Of course, this is coming on the heels of a couple of days of sell-offs out there, which saw the market get a little spooked, saw vol get a little rich. Hence, my comments earlier. I had the logins queued up. You know, the conversation about the danger zone. North of 20, you can start talking about that danger zone, that logins again. Coming into showtime now with everything green, we're seeing vol coming down a bit today, but still up substantially from our last show, which remember was a week ago, listeners. So the vol environment has shifted markedly from our last show. When we kicked off the show, VIX was a little bit shy of the 22 handle, about 2190. That puts it up about 2 3/4 points from where it was this time last week. VVIX was at a 123, back up in the 120s, listeners. Up about 8 points from where it was on last Thursday's show. VXX, so the product you folks love to fade, at about a 1930. That puts it up about exactly a point from where it was this time last week. Got as high as about a point higher than that. Got up to 2036 yesterday. So VXX back in the 20 handle, if ever so briefly. UVXY, same deal, at about a 13 when we kicked off the show. That's up a little over 0.75 point, about 0.8 point from last week. It hit a high of 1420. So UVXY threatening 10 not too long ago, now hitting a 1420 yesterday. This product kind of all over the place these days. And VolQ at about a 25.25 when we kicked off the show, up about 2 3/4 points from this time last week. Mr. Rock Lobster, it's been a bit of a weird one out here this week, I think, to put it mildly out there. I mentioned we have markets bouncing all over the place, of course, which is kind of interesting. After a couple of days of sell-offs, now we have seen this rally, so perhaps maybe all the concerns are behind us. We shall see. We saw some interesting things going on since our last show. We have China coming out recently and telling the Fed, yeah, don't raise rates, which to my knowledge, I'm trying to think the last time, if ever, I can recall a major world leader telling the Fed what to do. I can't recall that. Maybe back in the Volcker days of the 70s, the early 80s, maybe the Russian premier said, hey, don't do this. Can't recall it off the top of my head. So China coming out and saying, don't raise rates. And then on top of that, cutting their own rates by 10 basis points out there, just to kind of show the Fed what to do earlier. Of course, we got Russian troops poised on the precipice of invasion over there on the Ukraine. Seems like they're a hair's breadth away from spilling over the border. We'll probably get into more of that a little bit later. On TWIFO with Dan Grams when we get into all the energy madness going on, nat gas, crude oil. Of course, some of you like to talk wheat. Maybe we'll get into that as well with the Russian angle. And on top of that, that wasn't enough. We had Microsoft opening up the freaking pocketbook this week, spending nearly $70 billion with a B to gobble up Activision, one of the leading video game studios. So, not that long ago, a few years ago, they had a new CEO from Microsoft. Sony was repeatedly kicking the crap out of Microsoft in the gaming section. Their PS3 and PS4, or PS4 really, and PS5 have been just outselling for 2 generations now, outselling the Xboxes, hand over fist. There was some question whether Microsoft would get the hell out of the gaming side, and now doubling down. They own most of the major studios in the gaming world now. So Sony stock taking a hit as a result, off about $20 billion. So Mr. Rock Lobster, a crazy week since the last time we all gathered here together on the Option Block show. What is lighting up your tape, sir?
It's a week of, I think my vol, I don't remember my last vol guess, but I don't think it's going to be correct. I have to go look. What I would say is I've never seen I shouldn't say never seen, but it feels like there is like huge potential meltdown catalysts about. Okay, like, there's the speech last night from Biden. We won't get into the politics, but it was interesting. Let's just call it interesting. And I don't know. It almost sounded like he thought it was okay for the Russians to invade Ukraine, like a minor I don't know what a minor.
It was strange wording. Yes, they had to come out and clarify it after. We meant a cyber attack, which of course they already did. They did do a cyber attack, so it was weird. So yes, I'm with you on that.
I'm not trying to make the listeners, we're not, trying to be apolitical here, but I felt that was odd phrasing, of course. Then they kind of walk.
If you got someone poised on the precipice of invasion and you say, I guess it's okay if you dip a little toe in, just a little bit, they're going to probably do that.
the water's warm. So obviously I couldn't even imagine if Trump did that, 2 years ago with the Russian thing. That would have just caused the Twitter sphere to melt down probably. But so you got this Ukraine thing, right? And now and then also again in the speech, like Biden's saying the Fed is going to change tack, new tools, whatever, and he's got his governors, which are pretty dovish actually. So there's that signal now that we're assuming the rates are supposed to go up at this point. And I think part of tech getting hit this week, that was a part of it. Also now it looks like they're trying to sort of take some of the power away from big tech in the Senate. Now that we've gotten all these other voting things have kind of these other things they were trying to get through kind of died for the short term. Now like big tech kind of is on the plate. I feel like these are 5 to 8% potential moves in like the Q and the SPX on this stuff. And which is why VIX is still, it's 22. It's not, it is two, it's what is it? It's less than 2 handles from the danger zone, right? And I know you were getting ready to queue it up. We almost queued it up yesterday. So I look at this as all like there's a lot of what I would call big potential. Will it happen? I don't know. Do I want the Russians to invade Ukraine and cause a world crisis? No, but Putin has, I think, a lot of, he's going to shut the natural gas off to Europe. But at the same time, he needs the money from the natural gas. So if he's not selling it to the Europeans through a pipeline, that's a lot of revenue they're not collecting. So again, like the world's complicated, and vol right now, I think is just reflecting some of these big things. Okay, so this is like the industries that have held the S&P 500 up, right? Basically, Facebook, Microsoft, Apple, Amazon, Google. They're now kind of in the Senate crosshairs to some degree. It's about time. I think I think there should be something about to regulate some of the more, let's just call it, because you almost can't run a business without touching one of those companies. It's near impossible at this point. So I think that, whatever they could come up with, to kind of get in their grill a little bit probably isn't a bad thing. So it's like I said, you have these potential, right? VIX is 22. Index SPX was down 1% yesterday, I think, by end of day. Today it's up 1%. VIX is still 22. You're not seeing the realized moves in SPX for this vol. Like, so 10-day vol is 15. So that's not nothing. 30-day vol is 16. So, but I feel like the bid for vol is still on the movement to come. And I think that's what Volman will, of course, write about today is like, it's not exactly the movement today. Remember, VIX is a 30-day forward number. So, and it's looking at 30-day forward vol, right? So, well, the futures are anyway. So you got this, like, it's not quite happening now, but it looks like it could happen later. So these are some big geopolitical issues, like the rates, right? And even the Chinese telling the Fed not to raise rates. Like, that's again another one where Xi, if there's anybody close to all powerful on this planet, it must be Xi. So he's like, I'm just going to tell everybody what to do. So I find that again very, very interesting overall. So will any of these come to pass? Possibly, all of it could be nothing, right? I think the Fed will speak next week, and there will be some action on rates. I would assume they have to raise them. Apparently, from Biden's speech, it wasn't any policy. It was just, the supply chain issue is nobody's fault. It just happened. I guess, maybe you could argue there's some mandates and people not working and stuff like that and confusion that might have helped. And I think it's a global issue. So, there are issues now. What's amazing is companies, how fast big companies have kind of pivoted. Smaller businesses and cities are having a harder time. So again, there are all these weird things kind of are moving. It feels like the tails are moving in very different directions, which is when vol goes up. All the tail risk is very odd. So, and substantial. So now the bullish case. Is there a bullish case? I don't know. I would have to listen to Tusaw. I think economic growth in this country should be good. Everybody's going back to work after the COVID thing, right? I mean, basically you threw everybody out of work and now you're putting them all back on the jobs. So we should just be kind of getting back to where we're going. So again, so there's always that part. That is the positive part. On the flip side, you don't know exactly what, we're the rate thing is still waiting. The Ukraine thing has kind of been there. Now it's kind of bubbling to the fore. Oddly, why now? I don't know. The China telling the Fed what to do. I guess you could listen to that to some degree, but that's a lot of finger wagging mostly. So, and then now big tech in the Senate, which is a big chunk of the rally that we've had. So all of these currents are what like I said, big tails. And I think that's why we have volatility where it is. And it wouldn't surprise me, to see, them to pull the plug on the market. And then you flip it all over and then you look at, okay, now oil is ripping up, right? Which in general, higher oil prices has never been great for stock prices, as I recall. Try to find a time where you've had super high oil prices and the equity markets are booming. So that's, from a correlation point of view, I'm sure somebody could write in about that one, but I don't recall high oil prices and economic growth going hand in hand. So again, cross currents, higher vol, when will it end? I don't know. And underneath that is just the economy, people going back to work. And eventually it looks like, again, in the more positives, again, you throw it on the other side. And now the English are no more mandates, no more masks, no more nothing, no more border control. We're just we're done with all this crap. That, which I applaud. I think it's long overdue. And I think that, again, that's a more bullish sign of just let's get back to, we got the vaccines, that's all good, and let's get back to normal. So you have, again, you have these good signs, and then you have kind of the kind of the one-off crazy things that make vol go up. So that would be the vol man observation right now, if he could talk, that we do have, it feels like we have a couple of, let's just say it, outlier events in the wind that could really move the market. I think that's why, and that's why VIX is 22 without the market moving a tremendous amount to get here.
A lot to unpack there, sir. As you recall, remember, oil is expensive now, and of course that's a drag on the economy. But as you recall, when we got down to those dark days of the pandemic when energy demand was at its nadir, people were saying the opposite side of that, right? They were saying, oh, cheap oil, all these energy companies are going to go out of business. That's terrible for the market. So remember, oil, if it's too cheap, it's bad. And oil, if it's too expensive. It was like different sides of the same argument. It was very strange. But obviously don't have that. And then we went negative, and that was super crazy. But that's a conversation for another day. If you want more oil and energy and everything else talk, stay tuned. Again, almost exactly an hour from now. Listen to how the one, the only Dan Graham's joining me. He could talk about some energy and everything else out there. So we'll get into that in a little bit. You mentioned China. I was talking about that earlier, too. You've been around in this game even longer than I have, Mr. Rock Lobster. Can you recall off the top of your head any other time in recent memory where the leader of a major foreign power tried to tell the Fed chair what to do?
I'm trying to go back in time. I to be honest, I can't think of one at all. Possibly somebody in the EU, maybe when we were raising rates in 2018 and they still had their dumb negative interest rates and stuff like that.
Yeah, I can see a French PM getting a little uppity maybe and trying it, something like that. But, it's weird because, the president is not supposed to tell the Fed chair what to do, yet it's okay for China to come over and do that. That just struck me as odd. So, yeah, a lot of odd things on the docket out here this week. Of course, oil, everything else. We'll get to all that fun in a little bit. Let's see what's fun right now from a mark. Oh, by the way, you're a big softy guy. Really quickly, what do you think about them open up the pocketbook this week? One of their biggest acquisitions to date, sir, and in the gaming space of all things.
Well, you look at stocks like Roblox and Palantir and, and where like this kind of gaming is a real, at least from what my kids tell me anyway, is a kind of the wave of the future. I think they're looking at this to kind of, again, in my view with Microsoft, they're buying sort of a backdoor into the metaverse, where you have a little bit more creative area with Activision, and they want to try to get in there through the side door. Plus, they're sitting on a mountain of cash, and who knows if the government isn't going to take it in a year or 2 years. You don't know, so they might as well. So I don't think they want to get left behind as the whole gaming thing just shifts radically. Because of, I think it is at this point, gaming is definitely an alternative to like standard entertainment, like TV and movies and stuff like that, right? So it does not surprise me that they're doing it, that they're paying cash. Surprises me because the value of Microsoft stock is
the cash thing threw me for a loop a little bit too. I was like, you dipped into your pocketbook for this? That's that was strange.
You could issue stock for this. It's $2 trillion market cap now. It's kind of like monopoly money.
That cash is going to be a little bit harder to come by in maybe a year or two. Maybe you want to hold on to that and you throw that freewheeling stock around a little bit.
Yeah, and I didn't that part I didn't get at all because obviously the guy that I don't know who engineered the Microsoft turnaround. Obviously the CEO, he must be a big part of that, and going to the cloud and everything like they have done, making those changes, getting rid of those awesome Microsoft Nokia phones. But this is like I just think it's a no-brainer to use your stock at this point. But obviously I'm not the CEO of the company, so I don't know, but I basically okay, my cash or this stock that's trading at a 40 multiple. So that's an odd one to me. I haven't seen that guy mess up very much, but it seems like they kind of slipped up on that one a little bit.
Yeah, that was the only really strange thing to me. Other than that, and the size of the deal. I mean, Activision, that was a huge acquisition. So clearly they're coming to play, pun intended, in the gaming space out there. There's going to be a point where they're going to own most of the major studios. You buy an Xbox console, you pay whatever their Game Pass amount is, $10-15 a month, and you get all that stuff pretty much for free. That's crazy. People have talked for years about the Netflix of gaming. Microsoft obviously trying to put that together out there. So intriguing stuff. Sony taking a hit. This is a big deal for them. Now they have to go out and gobble up some studios. Who's left for them to even acquire that's of that scale? Maybe EA and a few others. But that's a big seismic shift. Doesn't seem like it was that long ago, Mr. Rock Lobster. But I used to love trading Activision. But it used to be one of the more reliable premium rights in the business. It would bounce between the 14. If it got to 20, you knew things were crazy overvalued. So you could write premium on that thing all day long. I did it for years. It was fantastic. It was it was like Microsoft in that dead period for a while, where you could just write premium on it. And it was one of the more reliable in the business. Obviously, I forgot the exact buyout price, but it was way north of 20 with that acquisition. So a very different game. Again, all the gaming puns just rolling off the tongue out there this week. Let's see what's rolling out here from an overall volume perspective. In spite of everything we were just talking about, it's not a tsunami of volume out there today. VIX, not even at 300K, 260,000 contracts right now. The ADV 442. A SPY, a little bit north of 3 million, so looking a little bit more robust there, about 3.1 million. The ADV, about 5.25 million. The S, not even at a million, 867,000 contracts. The ADV, 1.53 million out there. IWM at 560,000 contracts. The ADV, 750 out there. So IWM looking a little bit more robust. But yeah, where's up a foot? It's like the markets are kind of just poised and waiting out there right now. Let's see what our top 10 most active tells us, listeners, about today's activity. Number 10, the meme. The meme king back in there, finally breaking back into the top 10 at exactly number 10, 252. So we're right at 250,000 contracts to break into the top 10 today. That also is not blowing the doors off. That's decent. It's not 150, 180, but it's also not north of 300,000, which is usually kind of my barometer to say, hey, this is a rock'em sock'em robots today. So we're not quite there either. It's kind of in the middle there today. 252, that gets you to AMC at number 10. Number 9, the aforementioned SOFI. 292,000, burning through all of their cash out there. Taking a pop today, back up. So they pretty much got back all of that, all of whatever hit they got here. They got down to 303, looks like, on the news of the acquisition. Now they're back up to 308 and 3/4 about. So getting pretty much 70 billion. What's that? Well, that's nothing. Let's get all that money back. So they're good for number 9, 292,000. Number 8, our old friend BBig. I haven't talked about them in a while, but I was talking about them with Dan yesterday on the old options boot camp there. He's been raiding out there of late. BBig back on the radar. Vinco Ventures had a pretty active 5-day period. 5 days ago, it was trading under $3. Then it got up to about 5.25 for a while there on Wednesday. So short-lived return of the short squeeze out there, then back to about 4.25 today. So interesting times out there in BBig. Number 7, NVIDIA. 400,000 contracts. NVIDIA is always on the top 10, and it's always around 400K. It's one of the more steady names in the top 10. And only number 7 today, so obviously things are popping off in some parts of the market. Number 6 is Lucid. An EV maker's got to be up there. Today it's Lucid. Number 6, 433. Number 5, AMD, the other half of the symbol twins there. 516, so we're up to number 5, already over 500,000 out there, so that's interesting. Number 4, yes, I said number 4 is Tesla. I can't remember the last time I saw Tesla that low. 733,000 contracts. If that's not crazy enough, listeners, number 3, yes, I said number 3 is Apple at 790. Mr. Rock Lobster, I cannot remember the last time we had a completely new top 2 where Apple or Tesla were not somewhere in there. Can you?
Yeah, I have to say again, it might be like a little bit of a symptom of fatigue at the top of the market. Just a thought there. They have been ruling the roost for a long time. It's got to be years though since Apple or Tesla wasn't one too. I'm trying to think.
Ford could pop up there. Others have popped up there. Lucid have popped up there to take the top spot every now and then, but always Apple or Tesla are number 2. Today, yes. Neither of them in the top 2. Let's see what number 2, SOFI, Mr. Rock Lobster. Wow, SOFI up there, number 2 today with 887,000 contracts on the take, up to about 220 today, nearly 16%, trading right around 1589. Ironically, it's up 15.89% today. So interesting pop for SOFI. Number 1, this name just continues to just drive paper these days, knocking the 2 reigning kings to the curb. It's Ford. Ford, 986, closing in on 1 million contracts on a day when Apple and Tesla can't even sniff it. That's crazy town. Ford coming off a little bit today, off 20 cents. Looks like it got as high as 22.84 or so today, trading right around 22.25 right now. So coming off about 60 odd cents from those highs up there. So Ford giving it up, and apparently that's enough to drive some serious paper out there. I know a lot of you have been looking at Ford, trading Ford. Are you in on Ford right now? You've been trading out there, any flies or overwrites, covered calls or things? Ford's been a pretty active beast, on the recent run. It got up to almost 26, 25.79. That's pretty much the 52-week high out there. So it's been just crazy town out there in Ford over the course of the past month, and good enough for number 1. Let's see if we have crazy town from an earnings perspective, listeners. And lucky for you, We have hot off the presses from our friends over there at Oratz. Updated earnings move results, and earnings season reports just for you folks. You can get them if you're listening now, of course, in your hot little hands over there, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side. We got some big names popping off. Let's see. We had yesterday after the bell, we had Alcoa. They used to be kind of the official kickoff to earnings season. They've been usurped a wee bit of late. Alcoa popping off yesterday, of course, ticker symbol AA. They were trading at nearly $60, $59.63 going into their announcement. They're pricing in 7.2%. Get this, listen, that's a lot of juice for freaking aluminum. They delivered 1.8%. That was in the immediate blush after earnings. That's a dramatic underperformance. They're up a little bit more since then. They're up about almost 5.5% now. So that's a little bit closer to break even, but still, they were pricing in a lot of juice for aluminum. Go figure out there. American Airlines, that's an area you expect a little bit more juice these days. They were popping off this morning before the bell. They were at $17.31 going into their announcement. They were pricing in 5.6%. Wow, get this, listeners. They delivered 0.7%. We just had Matt on Vol Views. He was talking about expecting another banger of a season. Wow. So far, this is a whole lot of nothing here, and it's pretty much right around that level. It's actually right now only off about 8 cents from where it closed. So this thing has done a whole lot of nothing. Wow. If you sold some juice in American Airlines, you're looking around. Let's see if United Airlines can follow suit. They were yesterday, I should say, after the bell. 44.40 is where they were going into their announcement. They were, oh my goodness. They were pricing at about 5%. They delivered 0.1%. Wow, we haven't seen earnings this negligible since the dark days early of the pandemic. Wow, are we flipping? Is it going back the other way after almost making money last cycle, these listeners? Is this starting to end? Wow, this is not what I expected at all from our next. We look at the first 7 we had report last week. They blew the doors off. We were at 170%. Now, if you factor these names in, we're at a total of 27 names have reported so far. We're back down to 80%, listeners. So it's come in substantially, even though that is more closely in line with the average for week one. Week one over the last 12 quarters has averaged at 82%. So that's closer to what we expect. But still, man, a whole lot of nothing out there in today's and this week's earnings. Wow, I expected a little bit more out there. Apparently no joy. No joy yet also on the earnings trades, but when they identify an interesting trade, either buying a straddle, selling a straddle, buying a calendar, or selling a calendar, interesting one that intrigues them, they will put it in the report and crunch the numbers for you. So stay tuned for that. Let's look a little bit further ahead. Let's see if we can find some juice, listeners. And you know, when you're looking for juice, you don't have to look much farther than Netflix usually. They usually got some juice to spare. They're popping off today after the bell. They're at 5.15, almost 5.16 as of this report. They were pricing in 35.67. In the past, they moved $29. So we bit of extra juice out there in Netflix. You could argue the online streaming space more competitive than it's ever been, hotter, more volatile than it's ever been. I mean, a lot of big names like Disney and others really spending big money to compete in that arena. So Netflix having a challenge out there. So you can probably argue that vol is merited. Will they deliver it? We shall see. We got good old PPG after the bell tomorrow, or I should say today as well. 161.5 is where they were trading. Let's see, they were pricing in $7 pretty much exactly. And let's see, in the past, they moved 5.30. So extra juice there as well. Ally, our buddies Ally over there, Brian and OPR and all that good stuff. There tomorrow before the bell, they were trading at about $49. They were pricing in 201. In the past, they've moved 189. So not a lot of extra juice, but a little extra juice out there in Ally land. IBM, remember them? They used to be a big tech stalwart not too long ago. These days, no one really goes to IBM first for bleeding edge tech, but c'est la vie. January 24th is when they're popping off next week. 131 and about a half is where they were trading. They were pricing in about 6.25. In the past, they've moved 665. So actually less juice out there in IBM land. Let's go out to energy really quickly as well. Let's go out to Halliburton. They are on the 24th next week before the bell. Let's see, they're at 28.38 as of this report. They're pricing in $1.31. In the past, they moved 78 cents. Kind of hard to argue that they're isn't more vol merited in the energy space right now, given everything we just talked about at the top of the show. So we'll keep an eye on them as well. A lot to unpack as we keep on rolling, listeners. It is time to unleash the Eye of Sauron. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Mr. Rock Lobster, this is going to be an easy one here because this might be a record for our fastest payoff of a trade in the Odd Block history, because we just talked about it on the show last week. They weren't messing around. They were trading a contract that's going out tomorrow. So why not pay it off right now? We're going back to Sally Beauty Holdings, ticker symbol SBH. This was a newcomer, I believe, on our show last week. At the time, he profiled a 2,500 lot of a pretty meaty, there were the 17 halves going up 2,500 times for $1, pretty much lifting the offer. The stock was 18 and a quarter at the time, so these were obviously pretty deeply in the money. So paper was paying a decent premium to get these bad boys. And actually, I think this was myself and Uncle Mike. So Uncle Mike and I talked about these last week. And it was a pretty easy one to pay off because we only had to wait about a week. And let's see. So they're buying the 17 halves. They paid about $1 for those. So the math is pretty easy, listeners. They need to be around somewhere around the 18 half level tomorrow for them to have a winner chicken dinner, at the very least a nice break even on these. And it seems like Mr. Rock Lobster, they weren't long on the patience front, because it looks like they came in and bailed on not quite half, a little less than half, about 1,050 of these on Tuesday. They dumped them for 65 cents. So they got the heck out of Dodge. By the way, they paid about a 49 vol for these, and they dumped them on Tuesday for a higher vol, 63 vol, but obviously less juice, 65 cents. You need these moves to happen quickly when you're playing in the weeklies, and they did not get it. The stock at the time was $17.91. The stock when they put these on, by the way, listeners, was $18.28. So the stock had dropped substantially. Obviously, they got hit on these in the money calls. They decided to get the heck out of Dodge on not quite half of them, only a little over 1,000. So they dropped 37 grand on that chunk. And now they still have almost 1,500 still open. And right now the stock, Mr. Rock Lobster, at $17.84. So it's not looking good. These bad boys are worth a whopping 35 cents roughly right now, where they're bouncing around with the stock. So not looking good. They're on track to pretty much, sounds like, drop the rest of it. I haven't seen them come in to close out the rest of it yet, but it looks like they're on track to drop somewhere in the neighborhood of $250,000. Depends where the stock closes out. Is that your takeaway as well, Mr. Rock Lobster? Well,
I look at this and I'm like, and I see, I almost have a reverb now. It's weird. This is, I was looking at, this is kind of I think it's an interesting value play for a stock. I keep wanting to say this is Sally Hansen Beauty, but I don't think it is. Not that I know anything about Sally Hansen Beauty, but I seem to like, anyway. So they do shampoo and stuff like that. It looks like a relatively inexpensive company. I could see how they thought they were going to get a bit of a pop here, but I'm only seeing. Oh, these were the Jan 17. So that was for this week, right? Did they make enough of? Yeah, I don't think they made enough of to kind of to get back their investment on this one. I know you're covering it but I like now it's $17.89. They're not doing so good on
not looking too good. No, when you buy them for $1 and sell them for 65 cents, that's usually your recipe for not making a lot of money out there.
I think yes. Again, this is a weird. An interesting stock because it's kind of it's a stock that the market doesn't like anymore for whatever reason. I don't know much about the beauty business, but it does look like it's like a profitable company, but just doesn't have, it doesn't have the crazy tech growth multiple on it. Let's put it that way. Maybe somebody was looking for a little action. I mean, the stock just did trade 21, popped on earnings. And I'm not really a chart person, but it looks like it just can't quite break over. I'm looking at I'm trying to draw a little line, and I'm not doing a very good job on it. But it does appear like it wants to break out again. It was just $21, so I can see why they want to buy them. The problem is they just did not give themselves much time to be correct, which trading options and buying calls is usually the biggest problem.
Yes, you need time. And it was a meaty call, so that's usually a bit of a stock substitution type play. But they only gave themselves a week. If you're doing stock substitution, usually go out a little bit longer. So an intriguing choice, and it looks like it's not going to work out. They got a day, and we know in this market anything can happen in a day, but not looking good for them right now from a probability perspective. Let's get out to some newcomers. Always fun to find newcomers in here. This is not a newcomer. It's one we certainly have not talked about in quite some time. This is ABCL Biologics, Inc. Obviously a biotech out of Vancouver. This one, ticker symbol ABCL, ABCL. Let's see, trading right now, $9.42. Let's see, on the day, it's pretty much unched on the day, but on the year, this thing has been obliterated. My goodness. Of course, we're looking back on the year now, listener. We're looking back to January 20th of last year. So I imagine a lot of names in the mid-tier and lower tier of the market are going to look pretty bad because that's right coming off the crazy beginning of the meme stock madness, right? So from that perspective, a lot of names are probably going to look bad. And this name certainly follows suit. A year ago, it was trading $48.20. Wow. This one, by the way, was involved in the pandemic prevention platform for DARPA. So obviously they're very, very closely linked to the pandemic. Might explain some of that crazy level they were trading at. They got as high as 55.22. Yeah, that was on February 1st. And ever since then, listeners, it has been straight downhill to where we find them right now, $9.40, off a whopping 80% over the course of the year. So yeah, that's kind of rough. And listeners, if that's not bad enough for you, it looks like our Eye of Sauron found someone who doesn't think that upside is coming back anytime soon, because they were crushing some calls, listeners, to the tune of the April 9s. So they went in the money again as well. They crushed the April 9s 6,814 times for $1.35. They were $1.35 at $2, and these people weren't playing around. They crushed the bid for $1.35. So how many are good? They're done. And that's about a 57 vol if you're wondering. So they came out and said, you know what? If you're going to give me the chance to dump this stock at an effective price of $10.35, I'm taking it. I'm taking it all the way through April. I'm taking my $1.35. The stock at the time was actually a little bit higher, $9.57. So maybe they conspired to crush the stock a little bit too. There are earnings between now and then, which also could account for some of that juice. 3/28 is the date for the next earnings announcement. So Mr. Rock Lobster, a fair amount of juice they're getting on these bad boys, but also a sign that they don't think these good times of last January are coming back anytime soon, sir.
What's funny is when you talked about they help like with pandemic planning and stuff like that. So I'm just guessing they didn't do a really good job.
It doesn't seem like it. Either that or they got maybe a little bit of an optimistic multiple in the heady days of January of last year. I'm just putting it out there.
It's very interesting. Like, is this in the Cathie Woods, ARC emerging pharmaceutical biotech portfolio? Because you see stocks like this that are down like 90%, and you think, wow, so they're full stack AI powered drug discovery platform technologies, engineering, blah, 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 blah. But they actually have revenue. They have $400 million in revenue. So they got to be doing something. I have to say, this just looks like a cheap company for $9. It's just like a cheap biotech company for $9. I'm actually going to put this on my list.
There you go. I am Sauron identifying Oblak candidates for the Rock. By the way, I just did a quick search and it says she does not own any ABCL in any of her funds.
Oh, okay. So this is, I find a lot of stocks and I just tell listeners, the easiest way to do well buying stocks is to buy them when nobody wants them, as long as they're decent companies, I try not to make it too complicated on myself. Like, wow, okay. So I have to look into a little more on this, but from a value point of view, now I could see why they would want to write the call, apparently. Nice market, though, on the call, 135.2. And to be honest here, they're selling the April 9s at $1.35. Okay, I mean that's certainly a yield, but we also have the odd block sniff test that as soon as somebody sells 8,000 of them, they go $1.40 bid right away. So we know that somebody is pissed they did not get to participate on that print. So that's a bit of a giggle for me. To be honest, I think $1.35 for these calls is pretty cheap out to April. So I don't know how much of their growth is kind of tied up in FDA approved drugs and stuff like that. It doesn't appear to be. They're more.
Sounds like someone's $1.35 bid for these calls is what I'm hearing.
Yeah, they're $1.40 bid.
I'm saying you would pay $1.35 for these now. It sounds like.
I think they're too. I think they're too inexpensive.
Interesting. Who wants to sell these in our chat? Who wants to sell these to the Rocklop? Might be able to make a trade right here, Mr. Rocklop. So what do you think?
I think so. Let's get one of those smarty pants listeners, and I'll do.
They're all too busy slinging their covered calls on BBig, and there are a lot of butterflies on VIX from this. That's what they're all chatting about right now.
Right. So anyway, I think that's I just find them inexpensive. Relative for 3-month carry. It's just not that much money, especially with a stock that's, I mean, clearly it's in Palookaville right now, but it was a $21 stock. It was a $15.50 stock as early as November 15th. So, maybe everybody thinks the pandemic is over and, they won't have a need for their services anymore, but my guess is probably not. So, interesting. Abcelera Biologics.
Sounds like we have a trade for the Rock Lobster to discuss and track on options oddities coming up. I mean, I'm always buying this crap to talk about stuff on the show. It's your turn, sir. I bought the PBR. I bought all this crap. I bought VOD. I bought all this stuff. Time for you to dive out there. Let's pick up some 9s. Nice 10 lot. Let's go. Let's see how it goes.
All right. I'll see what I can buy. I'm now I have to look and see what I can get here. Well, the 10s are $1.10.
Ooh, the 10s. Oh, the 10s, yeah.
Yeah, but those are the 10s, so.
That's crazy town. 10's a crazy town. 9? Maybe you got an argument there. 10.
I think the 9s for $1.35 was a scoop. That was a scoop and a half, I think.
The Rock Lobster. I haven't heard you this excited about an odd block trade in quite some time. So that is interesting in and of itself. Listen, let's go out one more quickly. If you like biotech, maybe you like this one too. This one's a little bit funky. Let's go out to AMGN. Going back to the American biotechs and biopharmaceuticals out here, ticker symbol AMGN. I won't give you the long sorted history because they're kind of coming up against it. Suffice it to say, on the year, a year ago, they were 252. They're trading 231 3/4 right now, so off about a little over 8% on the year. We got a bit of a funky put spread out here, Mr. Rock Lobster, ratio put spread. Normally when I see that, I'm like, oh, okay, house money roll maybe, but because the second leg is doing more. But they're both opening, so it's just weird. We got a 1x2. Not quite 1x2. Close to it, though. First off, we saw the Feb 200-220 ratio put spread going up 7,350 by 3,675 times. They did it net for, looks like a $1.89 that they paid for this. Obviously, the 220 put's going to be a little bit juicier there. And then looks like they did a little more on the 220s later on. So the net total was about 4,000 on the 220 puts and 7,500 on the 200 puts. So not quite 1x2, but pretty darn close. And weirdly enough, Mr. Rock Lobster, this is also opening on both legs. So there is no roll, no house money roll. Let's see, on the year, AMGN has gotten down to 198.64. That was back in November 30th of last year. So they have broken through the 200 strike, but very briefly. This guy looks like he's buying the 220s and selling the 200s. Mr. Rock Lobster, what say you about an opening 1x2 put spread in AMGN, sir?
Yeah, I'm looking at this, and I feel like they're trying to back into a cheap 220 put on this. So not, they're. Anyway, that's just what it appears to me. So they're buying the 220 puts. They're selling 2 of the 200 puts, paying about $1.50. Let's see, what is that? 285 over $1, so about $1.85, something like that. A little more. And I think, well, yeah, because what's weird is biotech is not. If you looked at any of the biotech indices, I actually have an opposite trade like this. Actually, I have the same in IBB. So I'm doing the exact same thing, trying to scoop the stock at 125. So I think well, for whatever reason, they're selling the crap out of all the what I would call like big biotech. The multiples are super low, and I think they're doing the same. I did mine for credit. This trade appears to be a little more bearish. So they actually, were looking to make some money down to around 200. So, because they are doing it for a debit, which I don't like doing unless I'm actually much more, bearish in that direction. So, it's an interesting trade. I think it's a cheap way to back into some puts for some protection. And if the stock does look at 200 again, which it certainly could, also another way to think about it, which probably I know Tucson does things similar to this, to back into acquiring shares. So your acquiring price would be right around 180 in AMGN if you put this trade on. And maybe that's what they're trying to do. They're just trying to grab the stock at, relatively low levels. 180 would be right around a 5-year low. It's not the absolute 5-year low, but it's very close. And I'm pretty sure AMGN is a profitable company. Yes, it is. It pays $6 in dividends a year. So it's a company like this that's yielding 3%, which is just unbelievable to me, to be honest. So let's see here. I'm just doing a quick calculation. So if they bought the stock at 180 and it's yielding, let's see, so I got 194 times 4. So it pays $776, $7.76 in divvies per year. So let me do that. So we do 7.76 divided by 180, 7.76 divided by 180. So if they scoop the stock at the bottom like they're trying, so that would get them into AMGN yielding 4% a year. So for listeners that want to do, that type of calculation or something like that, when you do the 1x2s and there's divvy in the stock, your take for the stock at that price gives you the dividend yield you expect. If you're looking, a lot of people buy stocks to collect the dividend. I'm not getting any younger, so I like the fact that stocks pay me dividends every year, to be honest. But this gets you in at a great price, and your effective yield would be 4.3%, which is like for a biotech like AMGN, I feel like that's pretty darn good. It's really good, actually.
Yeah, I don't hate the 1x2 as a way to get into your stock. You're right. That's an intriguing one there, but just kind of funny that we see it. You don't usually see it opening on both legs. Usually it's a bit of a house money roll, and this time we're seeing an opening. So you like that as maybe an entry point here, listeners, or perhaps just an interesting way to construct some downside. Let us know what your thoughts on AMGN. Meanwhile, let's go really quickly. We've been gabbing on here today. I thought we'd be running short, but we're running long as we go real quick into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, really quickly here, our question of the week right now. Long straddles were popular on Mr. Overby's Options Playbook Radio last year. He wants to know if you think I'll be talking about them again. Will they remain popular and profitable in 2022? So far, 43.8% of you saying yes, 37.5% of you saying no, and about 19% almost saying you prefer short straddles. You got till the end of the week here to get in there, make your voice heard. Speaking of making your voices heard, this guy's been waiting for a little while, Mr. Rock Lobsters. Let's get into this one. It comes from James Lovall. He's doing a follow-up on a question he asked a little while ago. He asked a while ago, you might remember this one. He said, I've noticed that there's a particular type of spread that frequently goes up end of day on many of the meme stocks that have been squeezed. Deep in the money call credit spreads go up every day for stocks like BKKT, all that good stuff out there. The spreads are always put on for the price of the spread between the strikes, so it seems like zero cost downside. Is this a type of trade frequently done, or does it seem like one trader or institution or fund exploiting an opportunity they specialize in? This might be a mundane, boring, everyday occurrence, but I thought it was interesting. When I find opportunities like this in my paper trading account, I actually get a message saying I can't put the spread on because it's blocked by his broker, and we won't say the broker. We talked about it a little bit, but we said we haven't really seen that type of activity he's referring to, so send us an example. So he did. He sent us an example here. His example came, it looks like, in VNQ. This is a Vanguard real estate index fund, which would not be my first choice for something like this. I would expect, a Rocket or a B-Big or something, but VNQ is what he sent us. At the time, let's see, it was for the Jan expiration. These went up towards the end of December. Stock was 113, and someone put on looks like the 86.93, so a $7 wide vertical. Those are funky strikes. $7 wide vertical, and they did it for $7 exactly. Looks like they bought the 86s for $27.10 and sold the pars, or the 93s, 100 times each for $20.10. So they did it for net $7 even, which is exactly the width of his spread. So again, and the stock was 113, so this was in the money. So do you have any thoughts? Have you noticed any going up since the last time we chatted? And what do you think about James's example here of the VNQ $7 spread going up for $7 when it's in the money, sir?
So normally what I would say is all those trades are cost of carry trades. And anytime you see verticals going up for parity, it's a cost of carry trade. It just depends on what part they're playing. They're either trying to grab a divvy. Now there might have been a special dividend play in VNQ. I'm looking at some funky dividends potentially going up at the end of the So I'm seeing VNQ $1.53 dividend going up on the 27th of December. In the meme stocks, it could be a exercise squeeze play on a hard to borrow. So two market makers will put up a spread. They'll each exercise their longs and see what they get away with on their shorts. So there is that possibility. So almost always, I'm not going to say always in options, but I'm going to say 99 times out of 100, any spread in the money is a cost of carry play, either from hard to borrow, some kind of stub arb deal, or dividend. There's several different kind of cost of carry plays, but most of the time that's what they end up being. And it looks like this one, I'm looking at the date, it goes up 23rd, and they had a couple of special divvies go off here according to LiveVol. So my guess is it was a div play to see what they could skate on.
Yeah, I just pulled it up while you were talking, and the ex-div was 27th. So, yeah, that's around the time frame. When you see stuff like that, there, James, in the money stuff. And the reason they've swift shifted to verticals now is because OCC they used to do straight-up wash trades on the same strike in the money. And so they would go to the strike with the most OI and just bang it back and forth a whole bunch of times, hundreds of thousands of times, and try to skate and capture the dividend. OCC wised up to that, so they closed that loophole. So now they do verticals. So that's probably why you're seeing the verticals now. And you're right, this is right around ex-div time. So this particular one you sent us is probably a div play. Rock Lobster's right. The rest of them I'll have to go look and see. But again, that's why we are starting to see in general more in the money verticals, is because OCC changed their regulations. And so chances are, if you're seeing them, they're probably going to be around the ex-div date. If they're not, then you got something else going on probably again. As Rock Lobster said, probably playing with the old cost of carry. Mr. Rock Lobster, that music means we're done playing with this show. Who needs that Uncle Mike guy? We could fill an hour, just the two of us, just gabbing, sir.
Yeah, that the guy just hanging out in his sleepy hamlet. I don't know, but he has kind of a woodsy charm, I guess.
He's getting a little big for his britches. I'm going to have to knock him down to size a little bit over there. He thinks he's like the star of the show now. He can go off and leave whenever he wants, Got to do something about that guy.
Yes, he I guess he's he's become a lone wolf, so to speak, now, I guess. For me, go on over to optionpit.com, and I run our Vol Trade Club, Pro Group, Trading Legion, and Capital Gains. So if you want to learn how to use options to make money, come on over, check it out. And I'll tell you what, if you want to buy capital gains or you want to buy Trading Legion or Pro, ask Ted that I sent you and you get $500 off. There you go. Just for listening to this show, $500.
Ask Ted. And maybe you two can get the replay of Tradosaurus over there at Option Pit as well. Check it out over there in the land of the pit. Meanwhile, stay tuned. We got the big D, Mr. Dan Grams himself, joining us in about 26 minutes. Going to dive into all this madness and energy, nat gas, everything else that's popping off in the world of futures options. And should be a fun one. In the meantime, of course, I'm giving him a hard time. You can always go check out stcharleswealth.com to see what Uncle Mike has in store for you. Again, we got TWIFO coming up for you in a little bit. Back again tomorrow, noon Central, 1 p.m. Eastern for vol views. After that, for the oddities, let's see if the Rock Lobster is a man of his word and he gobbles up some of these crazy calls here in his favorite new name, ABCL. We shall find out. And we'll also find out what the heck's going on Monday for the next episode of the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.